Okay, this week we are going to learn how to sell final expense life insurance, mortgage protection, and annuities, as you can see on the board. So with that being said, if I can just make a comment real quickly, I'm going to just put in the comments that you need to order leads weekly to become successful. You really do need to order leads weekly to become successful. Hey, Jerome, I haven't seen you in a while, buddy, so it's good to see you. If you order leads on a regular basis, I can promise you, you can earn $5,000 to $30,000 weekly using my strategies. It works. So with that being said, let me put this shirt up, guys. How do we do this in the house? Once we have the leads, is the question, what do we do in the house, Jay? How do I make the sales? How do I become like you? What do we do? Well, one of the things you need to operate on, turn that fan on before you walk out, please. One of the things you need to learn how to do is maybe like captivate the audience, get the audience involved, which is the prospect. So once you're able to do that, you're able to teach people more and have them captivated by you. Maybe it's me. Maybe I was just blessed with a couple things. Maybe I wasn't. Maybe I took the actual time to study what it takes to become a final expense and mortgage protection and annuity specialist to be able to teach people what their money needs to be doing or what the future looks like. So one of the things I do best, I think, is paint the picture. So if you guys can learn how to paint the picture for clients, you'll be on your way to making a six-figure income, because that is the biggest thing that I do best. Is I tell Mrs. Jones, look, Mr. Jones, if God forbid something happens to you, Mrs. Jones is going to be out. She doesn't have the money to be able to afford what you two can afford as one. So mathematically speaking, if you just take a simple piece of paper, let's take this as a piece of paper and this is a pen. So here's a pen and here's a piece of paper. If I just take these two items in a house, I can sell them life insurance. So let's say this is my pen and this is paper. 9 times out of 10, let me use black for this. 9 times out of 10, all I got to do is draw a line, put Mr. Jones, his age, let's say 65, Mrs. Jones, let's say she's 65 too. Out of the two of you, who earns the two with the higher Social Security? But one of the first questions I do need to ask, I want to know, if they have a mortgage too. One of the things I do is teach in final expense sales is how to become a mortgage protection specialist while selling final expense. So if you can know what the mortgage is, you can teach them how to cover the mortgage as a final expense specialist or special rep. So if you know the mortgage is $1,000 a month, and we ask the question, out of the two of you, who earns the two of the higher Social Securities? And the reason I'm asking this question is because Mr. and Mrs. Jones, Mrs. Jones, God forbid you're out of the picture, Mr. Jones, Mrs. Jones has to wait 6 to 12 months before she receives that. If she has to wait 12 months, can she afford to survive? So again, out of the two of you, who earns the two of the higher Social Securities? And 9 times out of 10, it's Mr. Jones. So let's say he earns $1,500 a month in Social Security. And Mrs. Jones' Social Security is $1,000. Well, I already know that she can't stay there because the mortgage is $1,000. And this is a good way to use this to define mortgage protection sales on a final expense lead. So this is an FE lead that we're speaking about. You can turn it into mortgage protection. Now, Mr. and Mrs. Jones, Mr. Jones, are you leaving her anything else behind besides the $1,500? That could take 6 to 12 months, and that's on today's schedule. It may be 24 months someday, guys, before people are actually able to collect the Social Security of the other individual. So you have to be aware of that so you can inform them of that. So on the bottom line is that if he's earning this and he's taken out and she's only got this coming in, she's doomed to pay this mortgage. What happens is, we'll get into that, is they lose the equity in the house, and that's what you're trying to protect, just like in mortgage protection. So for now, hey, let's say, Mr. Jones, are you leaving her anything else behind? Yes, I have a 401k. Great. Now this is where you get into learning how to fish out the money. So 401k. Now on top of that, Mr. Jones, is there anything else that you'll be leaving behind? You have cash in the bank or bonds or anything else, stocks? Yeah, there's some cash in the bank. About what will she receive? See, I'm asking in a way where he's not familiarizing himself with me, just bluntly asking him like I'm getting into his shit. I want him to learn that that he can trust me, that I'm actually here to protect his wife. And that's what a lot of you might be missing, is the fact that you need him to understand that you're actually here to protect this woman from the worst day of her life. So, Mr. Jones, on the side of that, yes, I got $10,000 in the bank. So we put all these numbers together. The next thing I need to do is say, look, I want to get all the cards on the table. I came here to make sure that you knew all your options, that you understand all your options. That's all my job is, to make sure you understand all your options, okay? Okay. Now, they agreed. They said the big word, okay, which opens up the doors for the 401k to be looked at as an annuity product now. Now, Mr. and Mrs. Jones, as you know, that I'm here to do this final expense for you, so I'm here to take care of that. But I'm also going to show you avenues of getting that final expense paid for without it coming out of pocket. Would that be okay? Another okay. How do I do that? Well, I have to show them a presentation for the 401k. 9 times out of 10, people are going to be okay looking at something that makes them money. If you can convince them that there are no more downside market potentials, there are just the upside market potentials, and that they won't have any issues having access to the cash along the way. And if they take a 10-year look back, just take a look at the product and let me prove to you, if you were with this company for the past 10 years, you would have doubled your money. Okay, does that sound good? Yes. Now, if you guys don't have a laptop, and I'm going to tell you right now, if you can get them tangible paperwork, like actually have paperwork to hold on the annuity itself, you know, that helps them make the sale better. I'm talking about doing a printout. Like, if you know that you're doing an annuity sale, come in with the annuity prepared tangibly so they can look through the annuity itself and check on the numbers and make sure that everything looks correct and is on the up and up from the standpoint of an illustration. If you don't, ask them if they say, like, Mr. Jones, do you have a computer? Do you have a printer? May I use it? I want to show you the tangible proof. I want you guys to be able to look at it and go over it, you know, into the future. And they say yes to that, that's fine. It's an easy sale, guys. Believe me, it really is. You can make a lot of money doing this. How much is in that 401k, Mr. Jones, so I know how to do the illustration? I have $150,000. Now, 9 times out of 10, if a lot of you sell this, let's see, 10%, let's see, 7. A lot of you can make anywhere from $5,000 up to $10,000 on that sale alone. So, you know, you're spending 3 hours with somebody and you're making $5,000 to $10,000 and it costs you $7, maybe even $4 for this lead, sometimes less. I mean, that's a huge return on investment. That ROI is incredible. And you have more people to see that day. So long story short is this is how I fished it out of them. The rest of the process is getting down to showing them the illustration and convincing them that there are no more downsides in the market potentials, that upsides only. It's all you're participating in, Mr. Jones, is the upside of the market. So on a piece of paper, I take their $150,000. I say, look at this. Just in 10 years, you'll be 75 years old at this time, okay? You'll still be ticking. However, this will be $300,000, okay? And then from there, it grows to $600,000. And from there, it's $1.2 million. This is the astronomical look back that people need to see, guys, and you're not showing it to them. If they could see the numbers, they can trust you a little more. How do they get the final expense paid for? Well, here's how. They get their 10% that they're allowed every year out of these products, okay? And what they can do is they can take the interest earned only. All they're doing is earning 8, 9, 10% interest sometimes, and they can put it towards the final expense product. So not only can you sell this, but you could show them how to get a final expense or mortgage protection product because remember, in this scenario, she had a $1,000 a month mortgage to pay. So she definitely, and she's only bringing in $1,000. And after he passes away, his Social Security leaves behind $1,500. But she has to wait 12 months for that. So what you're doing is you're showing them a way to get products paid for, along with the fact that you're showing them the proper way to protect their future without any downsides. Look, if he has $150,000, these damn pens wear out so quickly. If he has $150,000 and he takes a 30% loss, God forbid, but if he does, he doesn't have enough time to get it back. The other thing is that he rather pays taxes on the seed than the harvest in an annuity. So you can train them on, instead of paying on the harvest, you just pay on the little bit of money that you get each time you pull a draw, instead of paying on big numbers that you pull out to survive. Okay, so for all you stockbrokers out there, no offense, but I mean, I'm in business of protecting people. You know, you're in a big business of building them equity, building them money. That's great. But this is a way to protect the last little bit that they have out there. So long story short, we had the final expense lead. We turned it into a mortgage protection scenario, and we got the product paid for using an annuity. And that's how you pull an annuity product out. Again, how do you find the annuity? All I'm doing is fishing. While I'm in the home and I'm going through the process, this is a blank piece of paper. I might go through several of them on a clipboard. So get yourself a clipboard and put blank pieces of paper in it, get a pen out, and start drawing everything that you talk about out. Instead of just sitting there with your hands full and discussing this with them and projecting into their minds all these numbers that they can't process, put together the numbers on paper. Ask them, do you have a mortgage? Yes. What is the number monthly? It costs us $1,000. How long have you had the house? Equity is what you're searching for. Find out how much equity is in the house. God, we've been living here, what, 10 years? It's 10 times 12. That's $120,000. It's about $60,000 in equity. And there's a mathematical way to do this and find out how much equity there is. And I keep showing this to people and they love it. So I'm going to show it to you real quickly. And hopefully you can use it inside the house because it works. Here's the monthly mortgage payment. Okay, if I multiply that by 12 months, that's $12,000 a year. Then what I need to do is multiply this by the timeline of mortgage that owed. How long is the mortgage? How many years did they have on it? That's 1 year, that's 15, here's 30, most of 30 years. So if they've been in the house for 10 years at this point, in this situation, we multiply this by 10, it's 120,000. And then all you do is divide it by 2, equals $60,000. That's the equation. So at this point, if $60,000 in equity, and that's close, it could be $80,000, it could be less, I mean, depending on the era of time, but that's a guesstimate on how much they have in equity. But it gets their mind working on, oh my God, I need to protect that. Here's why we did it. Because Mrs. Jones, at the end of this story, only has $1,000 a month to survive on. So remember, the mortgage is $1,000, and Mr. Jones has $1,500 a month coming in. Mrs. Jones has $1,000. You take him out, he's dead. She only has $1,000 to live on. She has the 401k in this scenario, and that's why she can have protection, but due to the long run here, she may not survive with this too. Now, yes, in this scenario, she got the 401k, but if she didn't, she'd have 6 to 12 months to come up with the mortgage payment, which is $1,000 a month, and it could be doomsday for her, and she could lose what? $60,000 in equity. So in our scenario, she had the 401k, so she probably would have been safe for a little bit until this transfer of his became hers. But this is a good equation to show people when you're in front of them. So if you do this again, and this part's so important, and I'm actually going to repeat it again. So here's what you do. You take a piece of paper, you draw their names out, ages. So I used to do this because I forgot people's ages a little bit. And then I would ask, how much do you have a mortgage? If they rent, you'll know if they rent. Okay? That's not a big deal. But if you have a mortgage, there's equity, and we're searching for equity. How long you lived in the house? 10 years. Okay, so you times that by 12, you know that that's $12,000 a year. Long story short, I did the equation for you. If you need the equation, just text me and you'll be able to get the equation on me on this, and I'll show you how to get equity out any year along the line that they've been in the house. But this is what you're trying to protect. But you're here for final expense. You understand? You paid like $7 for this lead. I hope you did. If you guys are out there paying $30, $35 a lead, you're at the wrong place. It's too much for leads. You got to come to a place that has 24-hour-old leads, and it can help you make the process a lot faster due to people wanting your product too. So at the end of this, we also had a 401k. We can transition this into an annuity, an indexed annuity. What does that do to you? That helps you make $5,000 to $10,000 off of one sale. But in the beginning, you started with a final expense lead where you contacted Mrs. Jones and stated, hey, Mrs. Jones, my name is so-and-so. I'm coming to protect you for final expense. And but you transitioned into getting more information out of people, and that's your job. If you do your job right, you'll be able to make more money. So I'm going to show you how to do this in a different way too. This is another way to do this. So if you're in a position and you're at a home, one thing I didn't do in the last presentation was pull out the life insurance. So let's go back and review. Mortgage, yes, I have a $1,000 a month mortgage. Now we know how long they had it. They have equity. Mr. and Mrs. Jones, who out of the two of you earns the higher of the Social Securities? If you ask it that way, you're going to get it. You're going to get the information. Out of the two of you, who earns the two of the higher Social Securities? You don't want them saying, it's none of your business. If they do say, hey, slow down. The reason I'm asking is because you have 6 to 12 months for this transition to happen. So if Mrs. Jones has $1,000 and you have $1,500, I am warning you that she could wait 12 months to get this money. So I need to know all the numbers if we're going to do it right, okay? So help me help you guys. At the end of this, they're going to give you the number. So you got $1,500. We want to know life insurance. It's important if you fish out life insurance on people that they understand why you're doing it, okay? I want to know about your life insurance because it always makes sense. If I take 1, 2, 3 policies and this one's $75, this one's $100, and this one's $50, let's say this one's $25. This one's $10,000 in coverage. This one's $50,000 in coverage. And this one's $5,000 in coverage. Well, I got to come up with $65,000 in coverage and do it with this price. But it always makes sense to give people their cash value, get them a new jump start in life. Some people need money. I say, hey, look, could you use an extra $5,000, $10,000? I need to know how long have you had these policies. I've had them for about 10 years. Okay, well, I know automatically that all these have been earning interest on them and compounding. So if I take all these numbers, it's 75, it's 25, it's $200. I need to get them a policy for $200 that comes to 65,000 K of payout. At the same time, there's probably $10,000 in cash value in here. So I made them $75,000 on the deal because of the 65K. So I'm taking the cash value and I'm shoveling to them, and I'm getting the same price policy, maybe for less, maybe for the same amount. Maybe it takes a little more money. But at the end of the day, they got a $10,000 cash value, plus they're getting the same damn policy, and sometimes maybe you can get them more. So at the end of the day, they got a great product and they got a good system here, and they started over. So that's another way to do a presentation is by showing people their old policies, getting them to get them out, checking them out. Some of them might be term, index universal. Lives are great to work with. If it's an older index universal life product, guys, the simplicity behind that is taking an IUL, which has, what the hell is it called? It has increases in itself. The buildup, somebody help me out. I'm losing my mind because I'm talking so much. The IUL has COI, cost of insurance on it. There we go. Cost of insurance builds up over the years, and then what that does is it depletes the cash value. So the cash value could deplete. This could be $10 in year 5. This could be $20. This could be $100 in 20 years that they're paying out of their cash value. And once you're able to say, Mrs. Jones, these particular policies are designed to lose money unless you overfunded them. So did you put more money in than the $50 premium that they told you were supposed to spend? No, I did not. Well, I can guarantee you that one day this policy is going to disappear on you. And you've had it for how long? I've had it for 20 years. I bet you might have 5, 10 years left on this thing. And then you call the carrier, call their carrier to prove this. Say, Mrs. Jones, let me contact the carrier just to prove. I work with them anyway. 9 times out of 10, if you're a broker, you probably work with the company anyway. So check on the cash value. This means that if the cost of insurance is too high, that they're going to wear this out. If there's only $3,000 left in the cash value and the cost of insurance is $100 a month and goes up by $10 each month, they're going to lose this policy in about a year or 2 years to 3 years. And what you did is you took this premium, you got her $3,000, and you saved the policy from a policy they didn't know was going to need to be completed. And you used their health and age at the time of era that they needed it. Maybe they weren't healthy in another 3 years. I know this is more advanced stuff, but this is the stuff that truly makes people money. And if you don't use these particular strategies, you're not going to make the big dollar signs, guys. So please use these particular strategies when you're doing this. And this is the way to calculate people and show them how to make the right decisions based upon your products. Because if you do it any other way, you're just adding life insurance onto people. Most final expense people out there, when you're new, you go out there with a final expense lead. You don't find out anything about the individual except that they need funeral coverage, and you miss tons of money, like the annuities, or you miss the fact that they have life insurance and you're just adding more on. So if a guy like me comes behind you, I'm just going to compound all those premiums into one big premium and sell them a large product, give them the cash value, and make them happier than hell. Instead, most final expense reps are saying, here's your choices. You can have $5,000 for $30 a month. You can have $10K for $35, and you can have $20K for $40. And this is how you're selling, but you're missing the annuities. You're missing the larger premiums. So you're making $35, you're making $400, maybe $300, $200 a deal when you can make thousands of dollars a deal. So don't pass this up. That's what you took your license exam for. You have the license to be able to sell all this, but you just need to know how to do it. And nobody at your place is probably teaching you how to. I've been there. Most organizations do rah-rah calls, and they're not teaching you the right stuff over the, via webinars and over the phone. The sales systems just aren't in place today, guys. This is real life stuff that happens inside the home. So for you mortgage protection characters out there who want to sell mortgage protection or do sell mortgage protection, let's go into mortgage protection. Same strategy, different lead. So, it's like, hi, is Mrs. Jones, or hi, Mrs. Jones. You had, I'm calling on behalf of ABC Mortgage. You had filled out some information, requesting information for mortgage protection. And I'm the rep that handles your area. Are you and Mr. Jones going to be in that area at 1 p.m. tomorrow, 2 p.m.? You set the appointment. It's been a while since I set an appointment, so excuse the script. But I do have good, strong scripts. You know, get the appointment set, get inside the house, and when you're inside the house, you know, get comfortable. Seating arrangements important too. I teach this also, is that you do not want Mr. and Mrs. Jones to cross from each other. A lot of people do this. Your head's twisting back and forth. They get to discuss things without you seeing it. And it even works at a circular table. Where do you want them? Side by side. Mr. and Mrs. Jones, right here, in your line of sight. Mr. and Mrs. Jones, in your line of sight. So keep them in your line of sight. Make sure that you know what's going on in that house and become the expert. And you run the show. Tell them where to sit. You take the seat. Say, this seat's going to work. I'm going to sit over there. I have things to present to you. I need that table over there. Okay, Mr. and Mrs. Jones? Yes. Don't sit at the couch or comfortable places. You got to be uncomfortable. This is an uncomfortable solution. So at the end, the same thing. You want to know what the mortgage is. Mortgage is $1,000 a month. It makes my numbers easier. Okay, then I'll say again, out of the two of you, who earns the two of the higher Social Securities? And the reason I'm asking is because Mr. Jones, if you're taken out, Mrs. Jones is going to receive that. So if you're at $2,000 a month, then Mrs. Jones, that's what she's going to receive. However, the bottom line is it's taking 6 to 12 months. I have to be the worst case scenario rep, because if you don't, you could hurt them. Like, they may give it overnight too, within the first 30 days. But if it takes a year or longer, then you prepared her for the worst case scenario. Now, let's say she's at $1,000. Now we know their income too, which is good for you. So you know the total so far inside the household is $3,000. Now you're thinking, as long as their bills don't exceed $3,000, that they should be able to afford $100 to $200 a month for premium. All right. So there's a special formula for asking this without getting them all jumbled up too. So I also want to continue. Do you have any life insurance? Do you have any existing life insurance? Yes, we do. He has one, she has one. It's $5,000. It's just for a cremation. It's no big deal there. So it's almost like you can walk away from that for a second. Now, Mr. Jones, are you leaving anything else? Yeah, I have a pension. Okay, pension you can't do anything with. It's not a 401k, a stock-based product. Okay, finalize this last question. God forbid something happens. You said, God forbid if something happens to you, is there any cash you'd be leaving behind just to help her get by for a little while? Yeah, there's about $5,000 in the bank. Okay, so now you know all the figures. They got money in the bank. They got $3,000 plus his pension. How much of the pension will she receive? Important question. You need to know this. How much of the pension will she receive? She gets 50%. That's what? 50%. Well, I didn't tell you to say what the pension was. Let's say the pension's $1,000 a month. So she gets $500 a month. Then she'll get the $2,000. She'll be at a total of $2,500 to live on for the rest of her life. That's not much money, including inflation. So no matter how you look at it, it's bomb. But when they're alive, they have $2,000, $3,000, $4,000. They got a total of $4,000 a month coming in. So scratch this first number. And you could say this. You could say, hey, look, I want to get some numbers in front of you guys, but I need to know, or if I were to do a bottom line, at the end of the month, Mr. and Mrs. Jones, would you happen to, out of your $4,000 and all your bills are paid off, do you have anywhere between $500 to $1,000 left over? Yes, we do. Which one are you closer to? Well, we're closer to 500. So what do you roughly have about 250 to 400 left? Yes, we do. We're closer to 400. Okay. Now you know what to back yourself up with. So you understand that they have about $400 left over that's not invested. It's just used. Now, do you guys use any of that for savings? No, we've already taken out for savings. Okay. You guys play with that money? No, it's all play money. So we just use it to give it away to charity and things like that. Okay, great. So you're going to be able to use this. So hypothetically, if I told you guys had to live on their $4,000, show them this picture. Remember, they have $4,000 coming in. If you showed them a picture, can you live on $3,900 to $3,800 a month, even $3,700 on all your bills are paid? Everything's paid off. Yeah, we could live on that. So you could live on $3,700, right? Yeah, we could. That means that you can get them a product for $300 a month. And that's how you pull big numbers out of people, psychologically. So if you missed that, we could do it again and again and again. So just keep coming back weekly. So as you can see, I took them into a place where it designed a formula for them to understand what they can afford at the end of the month. Now, if you don't like this formula, by showing them, look, you have this amount left over, this amount, and this amount. You could show them 3 products, 1, 2, 3. Here's one for 100, here's one for 200, and here's one for 300. But now you're not selling, there's these low ball numbers at 30, 40, 50 bucks. You're selling big numbers. So when you walk out of the house, you're pays $1,000, $2,000, $3,000, $4,000, $5,000 per home. And that makes a big difference between sits, guys. You can sit with less and make more, and that's it. Bottom line. And especially when you're finding numbers like, if somebody in their bank account has, let's say somebody in the bank has $50,000. They got an income of $5,000 a month. They got a great income. They got their bills are paid by $3,000, leaving them $2,000 a month left over. So these are huge numbers to work with, and you can run into it. But this is the number we want to work with. We want to show them how to double this number every 10 years. I want to show you how to double your money every 10 years and then no longer have the volatility of the stock market and your bank's earning 0%. You still have access to it, and every year you'll be earning. So think about it. I mean, if you're able to add 10% onto this a year, that's $5,000 a year that they're making. So let's get 10 years by, that's $100,000 that they've earned, and they doubled their money. But they have access to this 5 every year. So they can take out up to 10% actually and go up to, well, that is 10%. They can go up to 10%. And they can take $5,000 a year that they never had, for the rest of their life, with turning income on. Depends on how old they are. But if you start somebody young at this and just keep doubling their money, and especially you guys, if you as a rep learn how to start an index universal life on yourself and use the interest on that sucker, you can make money too for retirement. So that's another story. We can talk about that later, but I do want to show you guys how to make money while you're in the business. Everybody should be investing into a product, a high interest earning product. And if you do that, your family will be safe, you'll be safe for your future, and you'll have more than you have now, I promise you. But it's called overfunding an index universal life. And if you do that, it's special, man. It really is. It's fantastic. It works. It does. At the end, we have a few other scenarios that you can run into. One is annuity to an annuity. If you run into an annuity that's low interest and you have a higher interest annuity that doubles their money every 10 years, you can take an annuity to an annuity. So you take an annuity to an annuity, especially the variables. And you take this and turn it into a higher interest earning one. That's it. Bottom line. Show the illustration. Oh, I don't have a way. I don't have a laptop, Jay. I don't have a desktop. I don't have a laptop. I don't have this. I don't have. Go to a library. Go figure it out. Go get the numbers done though. Bring the illustration if you know somebody has an annuity. A lot of you may know that somebody has an annuity and miss the chance to deliver the policy and then show the fact that they have this annuity and show them the illustration. Bottom line is that you knew from the sale that you made on final expense of mortgage protection that this individual has an annuity, you know how much it is, and you don't say, listen, I'd like to deliver the policy, okay? Let me deliver the policy. When you walk through the door, you say, hey, Mr. Jones, I have something for you. I thought it'd be special, and I wanted you to understand all your options. You're getting older now, and I just want you to understand all your options. All his options laid out on the table is you showing him an indexed annuity option, and that could lead into a sale. So very important. Hey, Jerome, can you talk for a second? I'm going to ask a rep a question. If you can unmute your mic. Jerome, you there?
Okay.
Okay. How you been? You good?
Physically okay. Not terrific, but okay.
Okay, great to hear. This is live on Facebook too, Jerome, so I want you to know. Look, at the end of the day, Jerome went from zero. He started selling. He uses these strategies. They work. He can attest to them. But I want to see, Jerome, are you getting back in the field soon? Or are you taking a break or what?
Well, right now I'm going to have surgery on April 23rd.
Okay.
All right. That's going to wipe me out for probably 4 to 6 weeks.
All right.
And then after that, I mean, I have my mortgage protection stuff all set up for the state of New Jersey.
Good.
And I think I'm in a point where as soon as I'm back out of the hospital from that, then I'll be able to get right back into the field.
Okay, wonderful. That's great. Well, I'll tell you, all I want to do is teach you guys a little something. I'm going to go review this real quick, Jerome. I just wanted to say hi. Thanks for being on this too, and I thank all you for being on this. I want to take a couple more minutes out. If anybody has any questions on Facebook, please just ask. So you can ask any questions here pertaining to life, annuity, mortgage protection, and any situation that you may be running into, so we can help you make more money. Even if you're from another organization, just please ask. This isn't a recruiting call or a webinar. This is a training webinar. So I want to go back. I want to talk about final expense. I want to take younger people now. You guys aren't always running into older people. You run into younger people too. So let's say Mr. Jones is, let's say he's 40. Mrs. Jones, let's take her 42. Now these people have all kinds of life left. Okay, it doesn't make sense if their health allows for me to sell a final expense product that bears $25,000, $30,000 on them for $30 a month, when I can train them. If I know how much they're earning a year, let's say hypothetically they got a six-figure income, they're balanced out at about $100,000. Out of this, $80,000 is in bills a year, and there's $20,000 left over. These are the kind of things you should be knowing while you're in the house. This is what's left over. You know, that's what they're trying to put away and save for their future. They don't have any savings. They have a savings account, but they don't have any interest earning products. The very first thing that you should do is go to your IUL products. Okay? You want to take this. If they have a balance in the bank of, let's say this guy's been saving for a minute and he has $40,000 put away in the bank. You also want to talk about an annuity product. This started from a final expense lead, but since they're so young, you can overfund this bad boy and show them what it looks like to capitalize on the interest. So what you do is you can sell them a low policy of like $50 a month, which at their age will cover about $100K in coverage, but you want to teach them to overfund it. Tell them to put $300 a month at it. Drill this thing fast and hard and grow. It's 7.14% interest. Up to 12.5. Okay? These are the interests that these things are kicking out. And everybody's missing the boat on this. And when you take advantage of the interest rates on these products, you can really grow substantial nest egg for yourself starting at a very young age. And if you don't, inflation is going to kick all our assets. So it's 4% a year. 10 years at 40% higher. Is your savings account doing 4% a year? No. Stocks, bonds, is your 401k doing about 3%? You know, everybody's coming to me and telling me, oh, I earned 16%, you know, last month. And what the hell does that have to do with anything when you lose over 40% over the entire year? You know, it just doesn't make any sense to equal 3% across the board. So when your lines look like this, you know, and you're going up, you're going down, you're going up, you're participating in all these downsides and wishing that these upsides make up for the downsides. When all you really have to do is participate in the upsides. All you have to do is participate in the upsides, and it'll double every 10 years. It's almost the same thing. So why you didn't earn as much one year or the second year, but you didn't lose any? When that drop comes again, some of you are going to wish to God that you did it, like 2008. Nobody lost any money in 2008 doing this program. They all gained. They stayed at the same interest. So they surpassed the people. Let me put it this way. If you take $100,000 here, and this is, let's say this is an annuity. You take a 401k over here, and it's $100K also. This line's going to go up. This line's going to go up. This line's going to go up. 2008 hits. This line crumbles. This stays where it's at. Now, this line has to come up again to restart. This line doesn't. It starts right from where it's at. This line comes up again. Another downside. No downside. This line has to come up again. And that's how you participate instead of just growing. So it makes sense for your clients to do the same. Don't have them participate in the downsides. And the bottom line is a lot of people don't have enough time to get it back, guys. So you must control their money. Teach them how to control it so they can leave a legacy behind. They don't want to be on this earth all these years and have $100,000, which you can turn into $200,000, and not be able to leave that, the house, the cars, the cash in the bank, coming up with $500,000, and not being able to leave that behind to loved ones. I would hope not, anyway. But at the end of this thing here, you want to take a final expense lead. Hi, Mrs. Jones. I'm doing a follow-up call to that call that you received yesterday on the final expense information that you requested. I'm the rep that handles that area. Guys, the lead's 24 hours old. How can you lose? The demographics on it make sure that most of the time the two people were in that house, husband and wife, 9 times out of 10 they got kids to cover. 3, that they have an income. You're not going to where people have to pay with EBT cards. We make sure of that. And that the lead is 24 hours old when you talk to it. So that's a final expense lead. And they're great. They're fantastic to use for your wealth and your growth. So look, we get inside the house again. A, check to see if they have a mortgage. Number 1, mortgage, $1,000. If they rent, no big deal. However, if there's a significant other, big deal. Same as the mortgage. If they're both on a lease, somebody needs to pay the rent. So it is like the mortgage. So you got to ask. Make sure that this significant other has the money. If Mr. Jones is 40 and he's bringing home about $4,000, no, sorry, let's say he's bringing up, let's bring him home $10,000 a month, okay? Mrs. Jones doesn't work. No work. She's a stay-at-home mom. 2 kids. Okay? Now there's 2 kids to cover, and there's 1, 2, 3, 4 people to cover. There's a $10,000 a month income. It's about 120 grand a year. You don't think you find that money in there to make a bigger sale than just 30 or 40 bucks a month, guys? That's what I'm trying to get to you, is stop selling low premiums. Get into selling larger premium deals. If you don't know how to, just ask. You know, really ask. Because at the end of the day, this guy's got $120,000 a year he's bringing in, and you guys are asking for 30 bucks a month, 40 bucks a month, 50 bucks a month, maybe top end 80 bucks a month apps. Okay, when you can be 200 to 5, even 600, 700 bucks an app, if you train people well on how to invest their money properly. And that would be through what? How would you take a 40-year-old invest their money? You take an index universal life product. Not only does it protect high on the kids and the wife, but with somebody with that substantial amount of income earning 7.14%, would grow like hell, overfunding it. So sell them a $200-300 policy. You tell them, hey, Chuck, I want you to overfund this by 200 bucks a month and want you to grow for the rest of your life until you retire. 30 years later, this guy's got $2.5 million put away. That's compounding interest at its best, guys. So that's the part of the puzzle that you guys are missing, is that they can really, really earn some big money. Tony Robbins' new book is all about compounding interest. And if you look at it, it's just incredible on how it looks. Like if you take the theory of taking a penny, you know, for 18 holes of golf course and taking it and multiplying it by 1 and 2, you know, you take it and you just keep adding it. I'm sorry. 1 equals 2, and then 2 plus 2 equals 4, and then 4 plus 4 equals 8, and then you keep going like that, and then it's like $10 million at the end. So it's incredible what compounding interest does. It is something that you guys have to value and bring it to the table whenever you're talking to your clients, because at the end of this puzzle is you making a lot of money, them making more money, and never losing money. If you don't have the right products, then just text join to me and we'll teach you how to get the right products. If you're not taught how to use your products, text join to this number here, 352-255-2594. Text join, and I will teach you exactly what products to use and how to use them properly, okay? Now, Jerome, do you have any questions? Are you running into anything? Do you want to know anything before I go on?
No, I mean, you know, for me, this is kind of a refresher, but also I was thinking that a lot of the sales that I've done, I've used your techniques. All the other techniques have always kind of fizzled somewhere along the line, but your techniques always seem to drive home a point, and all of a sudden I get someone's interest, and then we move forward.
Thank you, and I appreciate that, but that's the facts, guys, is that these created techniques, I did create them, and they do work, and they are duplicatable, which is important. Some of them are more advanced, but if I slow down, and for you to go faster, let me take a break here and let me slow down for a second. Let me take final expense. start from the beginning. I call the number and hi, Mrs. Jones. Thank you, Jerome. I appreciate it. Thank you, Mrs. Jones. My name is Jason. I'm calling on behalf of ABC Mortgage. If I was doing mortgage protection, I think I said final expense, excuse me. I'm doing a follow-up call to the call that you had received yesterday about the final expense information you already requested. I'm the rep that handles your area. I'm going to be in your area about 1 p.m. tomorrow. Does that work for you and Mr. Jones? Yes, that works for you and Mr. Jones. If they say no, it's very important when you're setting appointments to say, hey, I'm doing a follow-up call to the call that you had received yesterday pertaining to that final expense information you had requested. I'm the rep that handles that area. I'll be in the area tomorrow and set the appointment around your schedule at 2 to 3, 4, 5, 6, 7 p.m. If they say no, you say, okay, is there any reason that Mr. Jones cannot be there? Or I don't have a Mr. Jones. Okay, is there anybody that helps you make important decisions? No. Well, who would the beneficiary be? That's my son. Does he need to be there for any reason? So it gives you 3 shots at making sure that you're not doing a one-legger. 1, your husband. 2, this anybody helps you make important decisions. And number 3, the beneficiary. So it's important that you guys learn to make sure you're setting appointments properly and get in more houses. That's the beginning stages of everything, is the appointment setting. If you become great at that and really good at it, it's in my book that I'm writing, and it's soon to come out. So I'm almost done with it. It takes a while to write these damn things. But if you guys really, really dig into this stuff and learn it well and dial the hell out of people, you become good at it and own it, man. Remember, they asked for the information, okay? So I take the final expense lead. I get in the house. I got a pen. I got a blank piece of paper. I got a clipboard with a ton of paper in it so I can write everything out. I want to say, you know, Mr. and Mrs. Jones, thank you for having me here today. I'm here to get you a couple quotes on some final expense information. Some of the things I want to ask you just pertain to helping your future. So I want to make sure that we lay it on online so I can do the right job. I'm basically like the worst case scenario guy. So God forbid if anything happens, that it's secure, and it's taken care of financially. So Mr. Jones and Mrs. Jones, you guys have a mortgage to pay for. Like if God forbid, Mr. Jones, you weren't in a picture, would Mrs. Jones have a mortgage to pay still? Yes, there is. Okay, what is that about? That's about $1,000 a month. Okay, God, great. Now, if you were to no longer be here, Mr. Jones, does Mrs. Jones fall back on your? She does fall back on your Social Security. What about does she receive from that? How much a month would she get from that? See, the importance of doing it that way is the fact that I'm not just asking them bluntly, what is your Social Security income? You have to make it look like you're melting it into the procedure so they want to learn. Mr. Jones is getting $1,000 a month. No, let's make him get $2,000. Mrs. Jones, just to even a playing field out, what do you get to? I get $1,000. Now we got a total income of $3,000. Very important, okay, to know the income. Okay, Mr. Jones, beyond that, do you guys have any life insurance, by the way? No, we do not. If they do, you know he's going to know what to do. It's a lot of talking. I know a lot of you get on and off these webinars and you get bored with what I'm saying. And it's too bad because there's a lot of great information in this hour that you could use to make $10, $20, $30,000 a week. And if you want proof, I'll show you, okay? But if you want really proof of the income, I can show you. But this is what you need to do to really get this is about getting larger premiums out of people while protecting them properly, okay? So I know that you're asking about the 401k, the pension. Do you have any life insurance? No. Now, Mr. Jones, do you have a pension or 401k that you'll receive? I have a 401k. Again, that shows you that you fished out the 401k. And last question, do you guys have any cash that Mrs. Jones would receive either? And the reason I'm asking is because there's a timeline. God forbid if Mrs. Jones, Mr. Jones is 60 and Mrs. Jones is 65. Well, she's older than him, so she has less time. But if he dies before her, let me do this in reverse. I'm sorry. He's 65 and she's 60. She has a longer lifespan than him, so she needs more money to live on. So he needs to understand that too. What I meant to say is Mr. Jones is older than Mrs. Jones, so she has a longer lifeline by age. Like if she's going to 85, he's going to get there before her. So we need to secure her. If he left tomorrow, she needs enough money to pay for most things, including that mortgage. Why is she selling? Why does she need to protect the house and the mortgage? Because if she doesn't have enough to pay for it and they lose the equity. even in final expense sales, guys, you have to protect the equity in the house. So it's important notes that you should be taking is protect the equity in the house at all times. Thanks, Thomas. Appreciate it. Thank you all for being on here. Appreciate it. If you have any questions, let me know. Look, if what you're doing is protecting the equity inside the house. And that's the most important because, listen, Mr. Jones dies. They've been in this house for 20 years. There's $200,000 equity on the line. Now, your fault, you as a rep, you didn't get her enough money to buy the timeline from 1 year, 2 years to 3 years to sell this house. Okay? 1, 2, 3. Most houses sell within the first year, but this may be a bad economical time, so she might need 3 years. So your fault because she didn't walk away with $200,000 because you didn't coach them up on this. All you did was bury this guy. You put him in a hole somewhere, but now she lost the house. Great, you paid for a burial, but now she lost 200 grand. You see the difference in what you can motivate people to cover and how they need to be taught to do it? Because what they're thinking is, you're here to cover the burial. I need $10,000, but they missed this whole picture. They weren't seeing this. You realize, Mrs. Jones, that it takes 6 to 12 months for you to even receive his $2,000. You know that you're living on a $3,000 income and you're going to lose $2,000 a month. Your mortgage is $1,000. You only have $1,000 in. Some of them may say, well, my kids will help. Let me put a scenario in front of you. I've been doing this a long time, Mr. and Mrs. Jones. Take your children out of the picture. Let's not put them in the seat of having to pay for you. Economical times might get them too. How do you know they'll have enough in 10, 20 years? How do you can't foresee that. So let's not do it this way. Let's do it the right way. Let's get this on you, okay? I got a 401k too, Jason. Great, but we want her to have that for retirement. Leave that alone. Leave that out of this equation, man. If you die tomorrow, what we need to do is get her this 200 grand. We need her to also have the ability to ride the rest of the wave on a $420,000 401k, which, by the way, we're going to get to pay for this product. Guys, you let me do my job, and I will teach you how to use this product to pay for this one and double your money every 10 years, and I'll prove it. Just let me prove all the numbers before you make a decision. That's all you need to let them know is, I want to prove the numbers before you make a decision. Just let me lay it all out, all your options, okay? Please let me do that before we make a decision. Okay, let's do it that way. All right, great. Here's what we're going to do. I need a way. Do you guys have a computer? Yes, we do. Does it come with a printer? Yes, it does. I'm going to print out this information so you have it. It's tangible. This way, when you guys are thinking about it, you have the real numbers in front of you. What I'm going to do is so Mr. Jones, you say you got about $120,000 in that 401k, right? Okay, great. And Mrs. Jones, you got $1,000 a month. You have $2,000 a month in Social Security coming in. You guys got $3,000 total. You're not touching the 401k, right? No. You have any cash in the bank too? We got about $50,000 in the bank. Great. What we should do is, if you're optionable, do two annuities. You do one, leave about $5,000 in the bank for emergency money, maybe 10. Ask them, if you had emergency money, could you get along with 5 or 10,000? Yes. You want to add this into it. So if you can put this money together with this money, if you can, qualified, non-qualified, I'm not sure yet. So we have to figure that out. But it could come to 100 and, let's say 10 out, then you got a 140, 160, 160,000. The reason this is important, guys, is because most companies give a bonus. They can give 7%, they can give 10% bonuses. That means if this was a $16,000 bonus, that he'd be at what? $220,000 start? No, wrong. Somebody help me do the math. It's 120 and 16, 6, 3. Yeah, 136. No, oh, I'm sorry, it's 100. Take 120 and 16,000, 6, 3, 1. I don't know where I got this one. It could be, it would have been 170 if we did it this way. The 50,000 plus the 120 would have been 170,000. Minus 10 would have been 160. So it's about $160,000 bottom line. So if we take $160,000 and they add a bonus to it, okay? Long story short, it'd be like 180,000 something like that. but they're earning money. So instantly they go from 160 to 180, okay, overnight. Then you double this number every 10 years. So they double their money every 10 years. They go to 360 next year, 360K next year, in 10 years, I'm sorry, in 10 years. And then the next following year, though, they get to pull 10% out of 180. So they get $18,000 that they're eligible for the following year, even more because of interest. This is just the beginning. So they probably get 25,000 or so the following year. What you're allowing them to do is, I hope I didn't puzzle you up. I had to do some math in my head because I don't have a calculator. But we started with 120,000. We found out that he had cash in the bank. We take a part of that, we add it to this number. We put it into the annuity, they give you a bonus. The following year it earns interest. They get more money, they can take 10% a year. Okay, until the penalty phase of this annuity is over, which is usually 7 to 10 years. So it means they can't touch all of it, they can't pull all of it beyond this. After 7 years, they're allowed all the money be theirs. But they don't want to touch it. It's not the purpose of them grabbing all the money. It doesn't make sense as an investment, so you have to teach that too. You don't want all the money. How long have you had your 401k? You haven't pulled it out of that, have you? So most people say, if anybody ever says, what happens if I want it all? How long have you had your 401k? I've had it for 30 years. Have you ever wanted it all? No is the answer. So leave it alone. Look, this is pretty simple stuff if you really gain it and do it in the home. But if you simplify it, you're taking somebody that asked for information. If you base it on just getting people information, it simplifies your mind. Get to the house, knock on the door, be proud of your job. Go in there and mathematically do things. If you become good at the math, you'll become great at sales and you'll make more money. Mathematically help them make the decision, find the need. Or, like I say, create the need. You're the creator of this need. You create the need. See, the need that they have is different. They need $10,000, they think, to make a barrier. Some people got the idea that it costs $10,000, okay? But the real need is invested into the time that you found out some new things about them, like that they have a mortgage, and they have car payments, and they want to send a child to school, or they want to earn an income later on in life, and they want to have a better retirement, and they don't want to lose money in the market. And they don't want to participate in the fees of the 401k and things like that. You have to fish that stuff out of them. They're not going to bluntly tell you because they don't know that you know this. So become the pro and let them know that you know this information. Let them know that you're the expert behind the wheel of the car and you're a superstar driver, okay? So, I don't know. I mean, for me, it comes to me, you know what I mean? It just makes sense to ask the questions. I mean, what questions are like Social Security, do you have 401k? 3, do you have life insurance? 4, do you have cash in the bank? Or cash under a pillow? If you just get this information out, you can put together such large premiums and larger effective monthly earnings than you can believe if you can just get this information and mathematically squash it together for them to understand this stuff. This is an income for life, but one is lost. See, here's 1 plus 1. 1 plus 1 does equal 2, but once 1's taken out, this equals 1. So one of them is going to be left with one of the Social Securities. So they have to be advised of that. Number 2, this can lose money. This has fees. Get the company on the phone if you can. Tell them, let's contact your company and prove to you what you're paying in fees. If they don't know, they need to know. Stop being afraid of this business and start contacting the companies. Call the life insurance companies that they have. Prove that the Index Universal Life has cost of insurance. Prove to them that they can have $10,000 in cash value today, plus pay almost the same amount in premium. If not, they pay more premium. So what? They still got $10,000 in cash. Take this cash, turn it into an annuity. Get into the house and make the changes necessary for these people to win. And then you win. You make, you have $10,000 weeks every week, and you sold less. You're talking about selling like 5 people on big deals. If you can do that kind of number, sometimes you can do it less, and you know that there's more time in a week. So if you do this in 10, you're at 20,000, maybe even 30, and the worst case scenario is you still worked your tail off, but you're at $5,000 a week, and you're still making more than 99% of the country does. You know what I mean? So it all makes sense to do it this way. If you don't, you're just fishing for smaller numbers, and you're frustrated because you got lead bills you can't afford, you got a car payment you can't afford, you got a house you can't afford, so on and so on. And these numbers here lead you to financial freedom. This gives you time to rest and then put the right lead order in. What is the right lead order? The right lead order is easily $1,000 a week to do it right. It's easily $1,000 a week to make big money without having a headache. It really is. But if you're not there, you start with 300. Let's get you 3,500 to 5,000. Get a lead order in 600. Double your money. Maybe it's still 3,500. Still cash. Still you made money. Get $1,000 in. Get this sucker to 5,000, 10,000. What do you care? You made money. You know what I'm saying? You're going to make this money back. There's just no question. You got to stop having lead fear. The fear of the leads is going to cripple you. Stop it, really. Honestly, you got to stop it. So invest your money, but if you don't know anything about the business, obviously don't go out and spend your money until you learn a little something. But it comes down to lead flow. It comes down to your script on that phone, and make it simple for yourself to understand. Hi, Mrs. Jones. I'm doing a follow-up call to the call that you received yesterday, just 24 hours old. And I'm the rep that handles the area. I'll be in your area tomorrow to get you that information. You and Mr. Jones will be home about 2 p.m. Great, wonderful. I don't know why a lot of you are out in the field so late at night too. There's no reason to do that. You really should be. If you need to be, then do it. But you can organize your schedule to be home earlier if you find it in the day somewhere. A lot of these older people are home. If you're dealing with a younger crowd, obviously you got to go at night. I understand it. But if you're dealing with the elderly, 9 times out of 10, they're usually home in a day. And you could treat this like a 9 to 5 instead of 5 to 9, p.m. But you do what's necessary to get them covered. I don't have any questions, so, it's been a great time with you guys. It's been about an hour. I will be here next week. We'll probably do this again on Thursday or Wednesday. I'm not sure, but you'll get the link. If you want to join the organization, I just need you to text join if you truly want to be a 6-figure earning agency owner, not just a writer. I'm hiring agency owners now. I want to build agencies, okay? So if you're into building an agency and you want to build a 6-figure income off of that agency and other people's pens, please text join to my number and I'll get you started and we'll get you contracted. And if you have any questions, I'll give a minute to ask. Jerome, any questions before we get off? Anybody, any questions? And these are recorded too, by the way, so if you have any interest in getting involved there, these are all recorded. But other than that, I'm going to say sayonara, and thank you guys for joining this webinar, and I hope it helped. Thank you very much. Have a great weekend. Bye-bye.